Thank you for watching Taxes Made Easy. I have an excellent guest here, Silvia Navarro. She is a financial coach. So, very, very important. If you've never talked about a coach, these are all the fun things that most people shake their head at, want to run away from. And the biggest word that probably scares people is budgeting.
The B word.
The financial B word. So, but again, part of what we do is, and this is the whole point of the show, is to educate people, help them get a better idea, a handle on their finances, and that helps them with their taxes, helps them save for the future, and achieve a goal of financial independence. So, the whole show today is going to be focused on this interview with Silvia. She has a lot of great information as we go through it, and again, very excited to have her on. Thank you again for being here, Silvia.
Thank you for having me. Appreciate it.
Absolutely. And we're going to dive into this when we come back from this short break. Welcome back, everybody, and thank you for watching Taxes Made Easy, either live or on rebroadcast. You can always watch these shows on our website at guardiantaxlaw.com and just click the YouTube link that's at the top, and you can watch all of these shows. So glad to have Silvia Navarro here today. Want to introduce her a little bit, and tell us a little bit about yourself. How did you get into financial coaching?
How do I get into financial coaching? So, I don't know if you want to call it coincidence or what, but I remember it was around 2008. I stumbled across Dave Ramsey's show on the radio, because I used to listen to the radio on the way to work. Back then, you listen to the radio, and I don't know, but I don't know. I loved it. I loved everything I heard. Everything made sense, and I was hooked. I was hooked on Dave Ramsey's show since.
Okay, and so tell me about the training. Did you do any training with Dave Ramsey?
Yeah, so I started doing what Dave Ramsey teaches before, because I was working. I had a job. My career is in accounting, and so I was, I was making an impact indirectly, but I felt that I needed to make an impact with people one-on-one. And when I learned that I could become a coach through Dave Ramsey, that's when I took the opportunity and retired from my job, and took the training with Dave Ramsey and became a Dave Ramsey Master Financial Coach.
So how long did you work as an accountant?
So in total was about 30 years.
Okay, so that's a lot of experience. Did you help individuals or mainly businesses?
So I started out of college working with at a CPA firm. So I was doing accounting, public accounting, a little bit of taxes, not much. Mostly I focused on doing the books for the clients. Then I started working for the city. So I was hired as an accountant, senior accountant, and worked there for 25 years in various capacities in the finance department of the city. So worked there for 25 years, and then was able to retire to become a coach.
So when did you retire? How long did you
I retired in 2019.
2019, just before COVID.
Exactly. So I don't know what that is like, working during COVID. I was already retired.
Oh, there you go. So very nice. So you've been doing this since 2019. Do you work with individuals, businesses? Who do you look for to help out?
Both. So I help whoever wants to be helped, basically, right? So people who are who know they can do better with their finances. They know that they're working hard, but they have nothing to show for it. So usually people come to me, or businesses too, that are struggling with business cash flow or business budgeting. And so I help small business owners do that and structure their business in a way that they can save for taxes, number one, save for, those low months and stuff like that. So, yeah, I have both.
That's great. I mean, we help a lot of people out that have small to medium businesses and even some large businesses. Do you find when people come to you, do you find that they usually have a clue what they're doing?
No.
I sat down and it's funny. I did a podcast once with a financial advisor, and again, he advised people on investments, etc. And we were talking about taxes, of course, and I asked him, well, what's your profit for the year? And he just stopped and looked at me. He's like, I have no idea. He's like, okay, are you doing quarterly numbers? Are you looking at the numbers regularly? This is how you would make estimated tax payments. Like, I have no idea. My CPA handles that. I was like, are you doing that quarterly? He's like, no, we're not. So I was like, okay, well, there's a lot of tax penalties now for not paying sufficient estimated tax payments. But that's why people need you. So we're going to dive into some information here, but real quick, want to go over some a quick bio for Silvia. So she graduated from the U of A, University of Arizona, with a bachelor's degree in business administration, over 30 years experience in banking, accounting, budgeting, money managing, and finance. So congratulations, she retired from the city of Tucson after a career of 25 years, working mainly in the finance department to pursue her passion to help people manage their money and have peace of mind. I love that because that's one of the things we do, and that's one of the models that we have, that we provide that peace of mind to people. But to really get to the place where we can help them, it's so important that they get a good handle on their financial situation. So that's where, having a good budget. And the problem is most CPAs, they come in, they do the tax work, but they don't help with the day to day.
Right.
So just to finish up this bio real quick, we focus on helping people eliminate stress related to money by coaching them on how to organize and prioritize their finances. And again, a judgment-free environment, which is so important.
Right. People are already coming in feeling guilty or shame about, the stuff that they've done with money. And so I pride myself in saying this is a judgment-free environment. And, you can talk to me about what you've done. We've all have done stupid things with money, right? You're not the only one, so.
I love that, and it makes me think back to that commercial. I'm thinking of how we can use that in an advertising thing, but the old Geico commercials, we've all done dumb things. We all do dumb things, right? And managing money and taxes is a big part of that.
Correct.
I talked with someone actually earlier, just today, that owed over $1 million in taxes.
Yeah.
And again, was making really good money, lost it all, kind of this, and had this huge tax bill, but it started to make money again. I asked him, okay, what's your budget look like? What do your numbers look like? And he really just doesn't have an idea, but he's getting back on his feet. But I can't tell you how many professionals have no idea what their profit is. And yeah. I'm talking from hundreds of thousands a year to people making 30, 40,000 a year. But how do you plan? How do you prepare? And how do you grow your business without having a good
structure?
Good structure and a plan in place.
Plan in place, exactly. A detailed plan in place.
I love it, and that's why I really wanted to have Silvia on. She has a slideshow prepared, and we're going to go through that, talking about how she can help people. But again, I want to emphasize this. I mean, again, I don't get any financial, remuneration at all from her. But I really think what she does helps people. And when we do try to refer people to Silvia and say, look, she can really help out. We come in, we deal with the nasty mess with the IRS, but I think Silvia can really help prepare and I'm help you to prepare your normal finances on a monthly.
But prevent being,
Well, that prevents all the issues and prevents someone from needing someone like me. Right. You don't want to have to hire a tax attorney if you can avoid it.
Right.
And when you go to a CPA, if you have your stuff together, and I'm talking to different CPAs saying we need quarterly numbers, we need to do all this, and most CPAs just aren't doing it. There's a few exceptions out there, But that's the thing, people go to a CPA and they think they're going to get all the advice that they need from their CPA. Can you speak to that?
Absolutely. So, what, and we're talking about business, small business owners
And
now,
personal.
and personal. So, what business owners need to understand is that we need a team, a financial team.
I love it.
So, and this is what I tell my business clients as well. It's not you not only need a CPA and a financial coach, you need a bookkeeper,
Mm-hmm.
right? You need a financial advisor, financial coach. You need an insurance person, commercial insurance and personal insurance. So there's a whole team. You need a payroll person to run your payroll. So it's important for people to know that we need a team. We can't do it all alone, and that's why a lot of small business owners get in trouble because they don't believe they need a team. It's so important to have a team.
And they can get in trouble. What we see a lot is, well, and some of the value we bring is that we'll quarterback it. Do you help kind of quarterback the connection between the different professionals?
Absolutely, yeah. So clients come to me, they have just started their business and they don't have anybody, but they know they want to start on the right foot, right? They want to start their finances with a business budget, their business with a business budget. They want to structure, they want to know what bank accounts they need to open.
Mm-hmm.
And then I refer them to the CPA, to the bookkeeper, to the payroll person, to the insurance person, and financial advisor, and all those. So I definitely have a team of other fellow professionals that I refer to.
I can't speak to this enough. I mean, that's one thing we do is we will help quarterback and organize it. But some of the best cases, and that's the thing, we come in, we resolve the urgent issues with the IRS, and then we're stepping out.
Yeah, you're just putting out the fire.
We're the emergency surgeon.
That's right.
So we come and we deal with the worst mess, triage it, get them patched back together. But then long term, and we have clients that do this where they come in with someone that is managing their books, and we work through them, and it works a lot better because if someone else is willing to take that on long term, that's what they need is someone helping to prepare them to avoid issues. We can help deal with any mess, but long term success, I think, comes from working with a financial coach.
Yeah, and if I may, it's important to distinguish between a bookkeeper, for example, and a financial coach. So both very important, but a bookkeeper will look at your financial activity retroactively. They'll look, whatever you paid last month, they'll record it to produce your P&L. Versus a financial coach will help you look at your finances in a forward-looking approach, as opposed to what already happened. So we would make a plan to move forward.
I think that's amazing because so many people, they get P&Ls and they look at it like, okay, this goes to my taxes, but they have no idea how to use it moving forward.
I know.
And I'm sure I can use more assistance with that moving forward. So something pretty much all of us could use. We're coming up on another break right now, but when we come back, we're going to kind of step back, go through a slideshow presentation that Silvia's prepared for us, and talk about how all the different ways a financial coach can help. So we'll be back after this break. Welcome back, everybody, here at Taxes Made Easy. Very exciting to have Silvia Navarro here, and she's going to kind of take over as she has a slideshow that she's prepared for us to really break down what a financial coach can do for you.
All right, where am I clicking here?
Just on there. So, go ahead.
All right. So my hope for today, Hubert, is for your listeners and viewers to walk away with something they can implement today in their financial world and start seeing how it impacts their finances. That's my hope for today.
Okay.
So I will quickly go through this slideshow. So what I want to do is, oftentimes a financial coach is confused with a financial advisor or a financial planner, and I just want to briefly touch on that, where a financial coach is it's actually a mixture of things: financial education, guidance,
Mm-hmm.
structure, accountability, and aligning habits and behaviors with their financial goals. Because a lot of times people have goals, but their habits and behaviors are not aligned, and they're, I don't know if you have you ever made New Year's resolutions?
Oh yeah,
All the time, right?
yeah.
But
Failed at most of
but
them.
exactly, because my habits and behaviors are not aligned with it.
Okay.
So and then financial coach provides education, and like I said, they provide guidance, structure, and accountability. Accountability is a big one.
So you mentioned a financial advisor. Can you explain what the difference is
Of
there?
course, yeah. So a financial advisor is very important and very needed. Um, so they help you plan for the future, plan for retirement specifically, right? So they help you build a portfolio. They help you choose the different investment vehicles. They have special software that predicts how much you need now to save now so that you can live the life you want to live when you retire,
Mm-hmm.
when you want to retire. So they do, that's basically what they do. They focus on your investments and guiding you through that journey. And
Okay.
like I said, very important to do that. But
Perfect.
before you can even go to a financial advisor or financial planner, you need to have the money to go invest with them. And that's where I come in. I
Right.
help you save so that you can go see an advisor and start planning your retirement.
So I want to say something. It doesn't matter if you have a high income, low income. I'm sure you deal with plenty of people that have high incomes.
All levels.
And they're not saving anything because their habits or the money comes in and it goes right out the door, right?
Yeah, exactly. So a lot of times people are just playing a guessing game with their finances where they don't know what's coming in and they don't know what's going out. So it's really sad in a way because people work hard for their money and they deserve to know exactly where their money is going and what they can do with it and enjoy it, most importantly. So it all starts with a your vision and your goals, your dreams. So what I tell my clients is, what do you want? What do you want your life to look like in 6 months, in 12 months, in a year, 2 or 5? Start dreaming, because a lot of times people know they can do better with their finances. They can, they've earned it, they've worked hard, but how can they make a change? And it's really, they don't even know what to dream, you know.
One thing I see, and we help a lot of people that are older, retired, living on Social Security. And I hate to say it, if you're living on Social Security, I mean, you probably see it. They're broke as a joke. I mean, Social Security enough is not sufficient, and it's expected to get cut by at least 20% in the next coming years.
Very sad.
So, how do you speak to someone that's a little older, or maybe close to retirement, or retired in that position? Can you help them as well?
Sure. Oh, absolutely. Prioritizing and organizing whatever little money they have makes a huge difference. It's a transformation when they actually put it down in writing and prioritize. They're amazed how much more they can do with their money if it's organized,
Right.
and if it's planned. So a detailed monthly plan definitely makes the huge difference.
Yeah.
So yeah, then of course, people need to have a why. Why do you want to do this? Because that is going to be the motivation for them to take control of their finances and to win, to be successful. And so if they don't have a strong why, it's hard. It's hard. Sometimes they want to quit in the middle of it. But if they are reminded of their why, and a lot of times my clients, their biggest why is their kids.
Yeah.
I don't want my kids to view money the way I view money. I don't want my kids to grow up with fear of money. I want to teach them better habits, better money habits. But of course, they have to put the oxygen mask on before they can pass it on to the kids. So that's really what they're looking for, and that's their why.
Can I throw a quick pitch in here? One of my favorite charities out there is Junior Achievement.
Yes, mine too.
Can you speak to that real quick?
Yes, Junior Achievement, they educate, kids K through 12 on life skills, but not only that, but they teach this. They teach budgeting. They teach them how to manage their money. I'm one of the volunteers for Junior Achievement, so I love it. I love the cause, and I love being in the classroom with the kids and teaching them.
Yeah.
My biggest, my favorite part is when I teach them that they have to pay taxes. I love second grade. That's what I volunteer, second grade. So when we play games during the class, and when I say, okay, I put my, my Uncle Sam's hat on, and I say, I need to collect taxes. They're like, no, don't take away my money. I'm sorry, you have to pay taxes. And so Junior Achievement is the best. I love that organization.
If you're ever looking to volunteer, looking for your local Junior Achievement, they are a national charity. Sorry for that segue.
That's okay.
I love Junior Achievement.
Yes.
And goes right with teaching the
Yes.
youth like you were talking.
Yeah. So anyway, start dreaming. That's what I tell my clients. Start dreaming. And a lot of times they don't know. What should I dream about?
Yeah.
So luckily, Dave Ramsey has done a fantastic job at providing us with a roadmap for people to start dreaming. So I'm going to take the liberty to read Dave Ramsey's 7 baby steps, which you can see here on my screen. I have incorporated his 7 baby steps. I've added a few to fill in the gaps where I felt was necessary. But so Dave Ramsey's baby steps are: step number 1 is put $1,000 in a beginner emergency fund.
Okay.
Baby step number 2 is pay off debt using the debt snowball. Baby step number 3 is put 3 to 6 months of expenses into a savings for a full emergency fund. Baby step number 4 is save 15% of retirement. Baby step number 5, save for children's education. Baby step number 6 is pay off the home early, and baby step number 7 is build wealth and give. So this is what I've structured my program around these 7 baby steps, because I'm a Dave Ramsey Master Financial Coach. And so one of the things that Dave talks about is budgeting, but it's not part of his baby steps.
Oh, okay.
That's the one thing. So in my process, the first step is build a budget and stick to it. And so today I'm going to be walking people through a budget. Just do a simple budget to show them how they can structure it. We're going to talk about, by the way, step number 1 is the hardest and the one that takes the longest. But once they get it, they learn to love their finances, and it's all upwards from there.
Can you say that again? Because
they start to love their budget.
Yeah, that's probably a hard sell at first.
Absolutely. But it takes a few cycles actually for people to start getting it and to start enjoying it. I have to say, it's because they are experiencing the transformation, not only in the numbers, but inside of them. This is a whole transformation when they start budgeting, when they start looking at their financials from a bird's eye view, where they can have it all in one place.
So you're working with adults mostly. Do you ever work with people's children to help teach them these same concepts?
I have my own children that I teach them this. I know I have not worked with kids yet. But,
and that's I mean, parents, if you are budgeting or if you are learning these things, share this stuff with your children.
Yes.
Just one of the things I'm doing is I have a 13-year-old and I have an 18-year-old that we've been refereeing soccer together. It's turned into a part-time job for him, but he saved thousands of dollars, over $10,000 refereeing.
Nice.
And he was taking, 10% for the church, but then saving half of it, and the other 30 to 40% he would go and have fun with. And now I have a 13-year-old, I'm doing the same thing. But you should, if you're not sharing these concepts with your kids, you're doing them a disservice. So as you learn them, please share them with your kids and help them learn this as well.
Yeah, 2 big things to pass on to your kids. Start saving now, whether you're 13 or 18 or 20, start saving now. The power of compounding interest is amazing.
Mm-hmm.
And so start saving now and stay out of debt. Those are the two biggest things you need to teach your kids is save and stay out of debt.
Perfect. I love it. Yeah.
All right. So this is the process I follow. So the first step, like I said, budget, and this is the hardest step. I have to be, upfront with that. The next hardest step is the paying off debt because it takes longer, and but as soon as people start seeing debt dropping off, then they get excited and they, they get into gear. So, what is a budget? A lot of people cringe when they hear the B word, the budget word, right? And it's really, I don't know why there's a bad rep for budgeting out there. It's really just a plan in writing. It's like I said earlier, it's looking at your finances from a bird's eye view, and it's just having it organized. It helps you organize your finances. So when clients come to me, one of the things that I first say is, I can help you achieve 4 things for sure.
Okay.
And those are the 4 big components of your finances. And they are, number 1, your income. Number 2, savings. 3 is debt. And 4 is expenses. I can help you wrap around your arms around these 4 components. And once you have that, you're on your way to financial success. And what's the vehicle? What's the tool that we use? It's the budget. It's a written plan. It's a detailed written plan.
So can I share a quick story?
Sure.
When I first got married, my wife did a budget. Oh no, she would balance the checkbook and then she would do a budget. And if it wasn't balanced to the penny, she would get so stressed out, pull out her hair. And that's, I think, what people typically think about a budget. So can you speak to how do you deal with that stress or eliminate it?
Right. So a budget is whatever you make it. You can restrict it. You can be a micromanager of your own budget if you want. It's really your budget. You decide how much you're gonna allocate to each category. If you want personal spending, you decide how much that is. And it's exactly what people think. It's like, oh my gosh, it's restrictive. It's gonna take away my freedom to spend. But it's the opposite. A budget gives you freedom to spend guilt-free, as Dave would say.
Okay.
You spend guilt-free because it's planned. You allocate your spending money.
Right.
And I'll walk through the different steps for creating a budget, but that's what it is. You make your own budget. You decide if you want to be restrictive, if you want to be, very detailed like your wife.
Mm-hmm.
I tell people in their groceries, for example, the grocery budget. Do you want to separate pet food, for example, from groceries, or do you want to include it? Some people are very detailed oriented and they'll say, oh, I'm going to look through the receipts and I'm going to have a budget for my pets. Okay? Others would say, no, I just throw it in the grocery budget and it's in my grocery budget. So everybody's different.
So you tailor it to the individual, whatever their needs are and what their goals are.
Do I tell them what their goals are?
Tailor.
Oh, tailor, absolutely. Oh, yes. My program is not cookie cutter. I meet them where they are. Some people, tracking their expenses really stresses them out. And they're like, I don't know where to look because they're all over the place. We use credit cards. We use debit cards. We use my business debit card. We use PayPal. They're all over the place, so it stresses them out. And so what we do in that case, we consolidate all those payments into 2 or 3 first.
Make it easy.
And make it easier to track. Maybe we need to open different bank accounts. Maybe one just for spending, the other one just for gas and groceries. And so it's really depends on where they are and what they're, what they want to do. On the other end, I have empty nesters, people who, the kids are gone, right? They have the time. And they love, tracking their expenses and playing with their budget because they have the time.
Right.
But if I'm working with younger couples who are trying to run a business, each one has a business they're trying to run. They have small children, they're homeschooling, they're really busy. So I
Right.
try to structure their finances so that it reduces that stress of budgeting.
So they can put as much or as little time into it. One thing I do want to interject, you mentioned, and this kind of makes my hair stand up on end, is where people are using business and mixing it with personal. You kind of went, ugh, just now. That is a huge mistake. Can lead to audits with the IRS. So as a tax attorney, if you don't want to have to hire me, keep your personal and business separate.
Separate, yes. That's the first thing we do when I meet with clients. We go line by line
Okay.
through their expenses. This is business, we'll move it to the business. This is personal, we'll move it to the personal side. And so we separate them and we make the two budgets. We make a budget for the personal and we make a budget for the business. And they have to separate. They have to consciously pull out the correct debit card. You're going to now pay attention and look, this is my business. Is this a business expense? No, it's personal. We'll pay with the personal debit card.
Your bookkeeper will thank you.
Absolutely.
And your CPA.
Yes, you don't want to create a nightmare for them. So yes. So that's, in a nutshell, what a budget could be or can do for you. So here's how to make a budget. Do we have time?
We've got about a minute.
Okay.
We can intro it.
All right. So how to make a budget. This is a very simple budget. Of course, budgets, you can get as detailed as you want and go as deep as you want. So the first thing you do is you gather all your income, from all sources. You're going to subtract your needs, and Dave Ramsey calls them the four walls. So shelter, food, transportation, and utilities would be the first category. That's the first thing you're going to subtract from your income.
Okay.
The next category is the obligations. It's all the debt except the mortgage because that's covered in the first section. So it's all the debt that you have. So credit card debt, student loan, auto loan, or medical debt, and taxes.
And taxes.
So that taxes is going to be the first line on the debt budget because you don't want to mess with the IRS. You want to pay them first if you're on a payment plan.
I wholeheartedly agree.
So the next section is what Dave Ramsey calls sinking funds. I call them savings buckets.
Okay.
So what the savings buckets are planned expenses but that are coming in the future. For example, if you have car insurance that you pay the 6-month premium all at once, a lot of my clients do that because they save money.
Saves you money.
When you pay the 6 months all together.
So we're going to have to continue this after this next break. But again, this is something my wife and I do, and we can definitely improve what we're doing. So stay tuned, and this is all great information. Welcome back, everybody, and again, thank you for staying with us here at Taxes Made Easy. I'm very excited to have Silvia here with us. While she's saying this, I don't know if you've noticed my reactions. I'm like, yes, or don't mix business and pleasure expenses. So we're going to continue with Silvia. She was talking about saving for car insurance.
Right, and so I was talking about this section of the budget. It's the third section I call it the savings buckets. And so that's where people save for a specific expense in the future. Holiday, for example. We know Christmas comes every December, right? And a lot of people are not prepared. They use credit cards for holiday shopping, but instead, so what a sinking fund or a savings bucket would do for you is you would take the amount that you anticipate you're going to need. So for example, and we're just going to do easy numbers. So for example, if you think or are estimating that you're going to need $1,200 for Christmas, right? And we start in January, just for ease of numbers again. So that means you have to save $100 every month so that you can have $1,200 in December. But of course, you're not going to start shopping in December, so you're going to need to save a little bit more every month so that, when you start shopping, there's money in that fund and you're not using credit cards. So that's an example of what a savings bucket could do. There are a ton of things you can save for instead of using credit cards. The other one is taxes, especially if you're a 1099 person who gets their income through a 1099. Very important to start a savings bucket for taxes.
If I can speak to that real quickly, our lovely Congress, and this is bipartisan, so you can blame both political parties. In November 23, they increased the penalty for not paying throughout the year from 3% to 8%. So that's a huge jump for 2024, and a lot of people are going to get surprised by this. So if you're not doing this, especially moving forward, once you in 25, recommend you start doing it now. But moving forward, this is absolutely key.
So important. Get with your CPA so you can start making quarterly estimated taxes to avoid those penalties and interest. Very important. Another savings bucket to look for is car repairs.
We do that.
Car repairs. So yeah, those are just examples of the third section of a budget. The fourth section is the emergency fund. As I said at the beginning, the first thing is you're going to do a starter emergency fund. Dave Ramsey says $1,000. I've increased mine, and I've asked my clients to save $1,500. Cost of living nowadays is more expensive, and there's not a whole lot you could do with $1,000. Maybe $1,500 would help a little more to cover some of the emergencies. But so once you're finished with paying off debt, following Dave Ramsey's steps in order, then the next step would be to start fully funding an emergency fund. And I will talk about the emergency fund next and what that is. So here's a quick fact that I found. 66% of Americans live paycheck to paycheck.
I believe it.
But what does that mean? What does living paycheck to paycheck means? It means that people don't have any money left after every paycheck, after they've covered their needs and their obligations. There's no money left. So 66%.
Yeah, no, I see that on a regular
It's increased
basis.
from last year by 3%. All right, so here's my slide got a little messy there. Okay, so what is an emergency fund? So it's financial security. That's really what it is. An emergency fund really protects you from life. It prevents you from going further into debt, right? So for example, your car breaks down.
Right.
If you have an emergency fund, you have an emergency fund. It turns a crisis into an inconvenience. That's what it does. It's just an inconvenience. You have that money, you can pay for it. You don't have to think about, because it's an emergency. It's a necessity, and it's urgent.
I can't tell you how many people, very, very common, we have 401ks set up, and people that use and abuse their 401ks, and I'm sure you see it too, or people cash out retirement accounts early. They pay huge penalties and fees, and it's because they don't have an emergency fund.
I have a client who they make good money. They make good money, really good money. Their AC broke.
Mm-hmm.
They had to take out a loan, $10,000 loan, to replace their AC.
Right.
Yeah. If they had a fully funded emergency fund, which is 3 to 6 months of expenses, that would have covered it.
Yeah.
So what you do is, when you use the emergency fund, especially if it's a small amount, then you replenish it. If you're on track to paying off debt, but you have your starter emergency fund, but something happens and you have to take money out of the emergency fund, you temporarily stop the debt payoff process, and you replenish the emergency fund.
Okay.
Once you have replenished it, whatever you take out, 500, 600, 1,000, whatever, you replenish it, and then you move back to step 3, which is paying off debt.
I love that.
Yep. And so here are some ideas when to use your emergency fund. Ask yourself when something unexpected happens. Is it unexpected? Yes or no? Is it necessary? Yes or no? Is it urgent? If the answer is yes to all these 3 questions, yes, you may use your emergency fund. But if it's not, then that means it can wait. It can wait until you save for the unexpected event,
But we don't always want to wait.
right?
I'm
That's
sure
the-
you've heard about the study where they did with
Yeah.
the kids and the marshmallows, if they could wait and they would get 2 marshmallows. Have you heard about
No,
that?
I have not.
No, it's done years and years ago, and they actually, so the kids that could wait for the second marshmallow versus the kids that just gobbled it, that couldn't wait, they tracked them through life, and the kids that could wait for the second marshmallow did so much better in life
Yeah.
because they could put off and control their urgent desires.
Delayed gratification.
Exactly.
That's the biggest thing nowadays. People want things fast and now and easy, right? And
I
that's,
want that.
you got to put in the hard work, Hubert.
Yeah.
So next I want to cover how to pay off debt, and I'm going to go fast on this. So as you know, Dave Ramsey talks about the debt snowball.
Mhm.
So what that is, you list all your debts from the smallest outstanding balance to the largest. You start attacking the smallest balance first, and once you pay off and you pay minimum on all the rest of the debts. So once you're done with the first debt, the smallest balance, you apply that payment plus the minimum payment to the next smallest debt, outstanding balance.
Mhm.
And that's how you move through the debt snowball. There are many, many ways on how to pay debt. I have helped clients who have high interest rates. I'm paying 30% on this $15,000 balance on a credit card. I want to pay the highest interest rate first. If that's their desire, I will create a plan for them. And so that's why I was saying earlier, my process is not cookie cutter. It's not, no, you're going to use this method to pay off debt. There's also emotions involved with your debt. I had a client who I presented these two ways of paying off debt and the numbers and everything. But there was this one credit card that was really bothering her. It was neither the highest interest nor the lowest outstanding balance. Didn't meet any of these qualifications, but it was an emotional debt. And I asked, so what's going on? What's going through your mind? And she said, well, this credit card really bothers me. She had paid something emotional with that credit card. And every time she went to pay that credit card, really bothered her. So we paid that off first.
There you go.
Didn't follow any of the methods, but we paid that off first. And that goes to say that people are in different places with their finances. It's not everybody follows this.
Well, it probably goes to her why as well.
Exactly. Yep. Your whys determine your priorities.
Yeah, that's great.
Okay. All right. So here are some tips on saving money. Start today. Start saving today. That's the first tip.
Yeah.
And then set savings goals. Like I said, people don't know what they need to save for. I gave examples in the third category
Mhm.
of the budget, what to save for.
Right.
Some may even be a vacation, weddings, anything. So set a goal and set a date for that goal. Because if you don't have a goal and you don't have a date, that's why New Year's resolutions don't work.
Well, and right now, just kind of segue, we just had a death in the family. It was my wife's stepfather.
Ooh, sorry to hear that.
And thank you. But some of her siblings are struggling to get there and be there, and so the other family has had to pitch in and help out. But again, if you don't have anything, when life happens, when emergency happens, my father passed away in 2019, and again, he had an accident, so it was completely unexpected. I dropped everything, and my brother and we drove up to Idaho from Arizona and LA. We met in Vegas and just drove up together. And so we were able to take that trip. But then once he passed away, within a week or two later, we all went up as a family. And we were able to do that because we had some savings, we had plans in place, but the families that didn't, again, they struggle.
Yeah, they struggle. And if they have to, what are they going to do? They're going to reach for that credit card.
Yeah.
And rack up the debt.
Yeah.
That's, it's an emergency.
Yeah.
Right? So The next thing is open a savings account and earmark it for that purpose.
Mm-hmm.
A lot of people have a savings account and they just throw money in there, and then when stuff happens they just pull it out, and it really doesn't motivate them to continue saving because there's no purpose.
Right.
So what I teach my clients is open savings accounts and name them. Give them a purpose. Your emergency fund is a savings account, and it's called emergency fund for emergencies only.
Okay.
When you open a savings account, let's say for a trip to Hawaii for your next vacation, then you're gonna thank you, and then you're gonna know exactly where to get it from. So cancel your subscriptions, plan your meals. Those are other ways to save. And so the last tips I'm going to leave you with are, give me a second here. Here we go. Final tips to keep in mind. Have separate budgets for your personal and business. Separate budgets. Have an emergency fund. Become debt free. Start saving now, and have an accountability partner. That's what I'm going to leave you with, and hopefully, like I said, somebody can walk away with something they can implement now and see the difference.
So how do you talk to someone, and we have a little bit more time, but right now, interest rates, are you seeing those skyrocket? So how does someone plan for changes in the economy, especially with what's going on?
Budget. My answer is going to be budget, right? So really, know where your money is going. Yes, interest rates are climbing. Cost of living is,
Going up.
skyrocketing. So the key is to have a plan. When you have a plan in place and you follow it, you can weather any storm, really, because you know where your money's going. You know what you can afford. You know what you can do with your money and what steps you're going to take next.
I love that. Again, I want to thank Silvia for being here with us. Again, it's a lot of really good information. How do people find you, get a hold of you, and get more information on this?
Yeah, I'll start with my phone number, 520-314-1189, and you can also reach me by email at Silvia at Navarro financialcoaching.com. My webpage is in progress, so it is going to be navarrofinancialcoaching.com.
navarrofinancialcoaching.com. I love it. We'll have this episode posted. But again, so do you work with people across the country, or?
Yeah, thank goodness for Zoom and all those video apps that we can use. Absolutely, I work with people on Zoom, and that's all I really do is on Zoom, and mainly is for privacy purposes, because people can talk to me from the comfort of their own home, and they don't have to worry. If we meet in a public place, for example, you don't want to talk personal finances, around people. So I do a lot of video calls and video conferences.
And so I imagine there's a high degree of confidentiality with what you do.
Absolutely, yes.
So last thoughts. I want to thank Silvia for coming on. If you don't have a budget put together, I highly recommend you start the process. Again, when I had someone come in today, $1 million in debt, more than $1 million in debt, and we said, look, we're going to take you from where you are. We're going to help improve things. But one of the big things he needs, and he's going to be working with with a advisor, a CPA, and I'm going to try to connect him to Silvia as well, because planning is half the battle. If you fail to plan, you're planning to fail. And so again, this is very important on the road to financial independence and freedom, which is what we're trying to encourage and help people achieve. I focus on the tax side, but this is really the triage, the emergency room, to really help plan and gain that freedom moving forward. Contact Silvia and get your budget and finances in place for you, as we mentioned, for your kids. Have a great day, and thank you for watching.
Thank you for having me.